Hey everybody, Boris, Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar, May 13, May 17, 2019. Will dollar hold support this week? That's really the big question. The dollar index really turned down last week at the end of the week, surprisingly enough, but a lot of cross flow currents. Um, Ironically enough, the interesting thing that happened at the end of the week is that the risk trades, which is really anti-dollar, really picked up on the assumption that although the U.S.-China trade tariffs had gone into effect, the actual physical effect is not going to take place till about a month forward. So the market really viewed the whole standoff last week as essentially a kicking the can down the road for about another month. It's not really true that U.S. is going to impose the $200 billion worth of tariffs at 25% tariff rate until a month from now. So the idea here is that there's potentially a little bit more of a risk-on short covering rally, perhaps into the start of the week, which is what's pressuring the dollar to the downside. The levels this week have essentially changed significantly in the yen, but not so much in the euro and the pound. So the euro still remains 113 trade, although it's looking a lot more constructive and certainly has a chance here to run towards the 1300 level. Dollar yen really experienced some very, very strong downward pressure last week, took out the 111, took out the 110 level, and now finds very significant support at this 109.50. This 109.50 is really critical. If that breaks down, that really destroys the whole overall long-term structure of the uptrend in dollar yen. And cable was weak because I think just simply because of the confusion or market frustration with any development or any further development on some kind of a Brexit compromise. It really is starting to look, actually, because of the two-party talks, of course, as I thought would really fail. There's very little reason for Labour to really want to create any kind of a significant compromise for Tories. Tories today actually polled at their lowest level ever, I believe, in the recent polls. So there's a tremendous amount of danger here that fresh elections could really destroy the Tory party strength. What's even more disturbing is that it's the Nigel Farage party. It's not so much that the country is kind of turning more neoliberal. It's actually that there's a massive fragmentation and a very, very significant conservative base that's going to go to a reactionary far-right movement in UK, also creating a lot of destabilization. But be that as it may, I think cable certainly still holds support of the 129. We'll have to see if there's any further progress on the movement. The critical thing I think that will really be positive for cable is if the two parties if the Labour finally concedes that it's necessary to have a second referendum. I think the market will view the idea of a second referendum as a much more positive, pro-EU resolution, as many more people will come out and vote their way. We'll see how that goes, but all these cross currents is what's really creating a lot of counterflow in the pound. Now, looking at the data set this week, not much of it's sort of a quieter week this week on the data set, but we do have a couple of very interesting data points worthwhile. So certainly Tuesday, UK jobless claims. Here we are, there's a typo here, it should say short pound dollar. We are bearish cable because all of the PMI data was actually quite negative coming into the numbers, which means that there's potentially now a chance to test the 129 handle to the downside in cable. CPI data finally started to bounce back a little bit. These are revisions, not really much. ZOO data out of Germany, industrial production. This is sort of the green shoot scenario that's coming out. And again, the same story here with Germany GDP. All of these things saw a modicum of improvement off of very, very negative deterioration at the end of the year. And here, another thing that's kind of interesting, I think, sort of on a pro-euro trade is the tension between U.S. and China. In some ways, could create better opportunities for European companies because of substitution effect, right? So if China essentially locks down markets to U.S. companies, European companies may be able to open up bigger leads in the Chinese market. One of the things that people really don't appreciate, I think, is just how vital the Chinese market is on a global scale to massive consumer goods. It's the largest car market in the world. It's the largest box office in the world. So a very, very serious threat to U.S. trade balance and current account balance is the idea that if U.S. movies, which are the primary export vehicle, get shut out of the Chinese market. So we'll see. That's one of the reasons why I think euro is sort of a remaining bid here amidst all this tension. Now, going into the end of the week, we have trade balance data out of Europe. And the U.S. really, the big story in the U.S. is going to be the retail sales numbers, which are going to be on Wednesday, right over here. That is one of the things that could actually help dollar yen if we print better. If we don't, and this is a really critical thing, if the retail numbers really don't print better, that really puts tremendous amount of pressure on the Fed, I think, at this point, because it shows that irrespective of the jobs data, irrespective of growth, nothing is working. There is no final demand in the U.S. Consumer, and the financial conditions really need to be eased as we go forward. So should be a very interesting data point as we go into the end of the week. And then the end of the week is just sort of very quiet. We have U of Mich, which is not going to be much of an impact, and that's pretty much for the majors as we go. So let's take a look at the charts here and just see how everything sets up technically. So looking at the charts here, this is the reason why I'm mildly bullish euro. So we've taken over the 20. It's not exactly like a super bullish takeout of the 20s, but and you can see that this 1250 level so critical as a resist. Now, if we can close through the 1250, really, like if we could just barrel through to sort of like 1275 on a closing basis, that would be a very bullish impulse. It really sets us up for a run towards the 13s, 1325s, where there's a much bigger, chunkier level of resistance. So we've taken over the 20 SMA, but we do need that basically 75 to 80 pip push to really run through those numbers. We'll see if the front of the week, maybe positive European data, creates enough of a bullish momentum move for us to barrel right through those levels. Cable, on the other hand, looking quite negative, and certainly actually more vulnerable to the downside here if we get negative labor data and absolutely no resolution on where we're going with Brexit. So all of the data points and all of the technical points here are just much more negative. Look at the flame out candle on Friday. We're touching the SMA. We definitely hold it. Now, cable is notorious, of course, for faking people out, and this could very well be a fake out move, but I really don't think it is a fake out move until and unless, what's the high over here, around 30.47, until we close through the 30.50s. Like, we need to close through 30.50s in order for this to confirm itself as a fake out down move. Until then, you could probably trade against this this top for a continuation move, perhaps on down to the 29s as the week progresses. And here's the yen. The yen held. This is the only positive thing I think is in terms of the dollar movement here. The yen held this double bottom at 109.50. Not, monstrously positive hold, but hold nevertheless. And it certainly stretched away from the moving averages, so it has scope here to trade to maybe 110.50, 111. 111 is certainly the very big resist point here. A positive retail number would certainly give us a much better push towards that level. And certainly, this is the other key thing. We need to see the 10-year run through the 250s to give us even a more positive move that cinches this whole 110, 111 move to the upside. That's pretty much how the majors shape up. I wish you guys the best luck, the best trading. Boris, over now.